Hey, my name is Jake Nicholson and welcome to my YouTube channel. In this video, I want to talk about the amount of low deposit mortgages has skyrocketed. In fact, it's back at levels that we last saw in 2008, just around the time that we had the property crash. I'm going to talk to you today about why this is happening, what impact this will have on house prices, and should we be worried like when we look at the data and we see what happened in 2008. Before we jump into this, if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit the bell notification. We've got new property content every single day. And if you want to get that, you need to subscribe. But let's also get some more views on this video so more people are aware. How do we do that, you ask? Simple. Smash like, tickle like, do something to that like button. That helps with the YouTube algorithm and really helps the channel grow. So thanks to everyone that does that. So, 2008 wasn't great. 2007, it was very easy to get mortgages. I recall having self-cert mortgages where the mortgage broker just asked you how much that you could borrow, how much you earned, and you put a number down on a piece of paper and nobody checked it because it was self-cert. Now, some people extended themselves too much during those times, and because of that, they got in real financial difficulty and ultimately got their houses repossessed. That was a problem, and that's what started the financial crisis and the Great Recession, as it was known. Now, are things going back to that level? Well, there's some things that we need to look at here, and that is the fact that low deposit mortgages are massively increasing. There is a lot of them out there at the moment. So let's look at 5% deals. So how many low 5% deals were there 2 years ago? So 2 years ago, there were 204 lenders. So that's in 2023. There were 204 lenders that would lend you on a 5% deposit. Now, today, this has jumped significantly to 442 lenders that will lend you with just a 5% deposit. Now, that's a risky deal if you're a lender, because let's just say property prices go down 10%, then unemployment goes up and those people can't pay their property and they're in negative equity. They'll just give the keys back and then you're stuck with a property you're going to have to sell at auction that will get another 10% or 20% off that price, and you will lose a lot of money. And that's what happened to banks last time. But what about 10% deposit? Because they're a little bit less risky. Well, 10% deposit deals, there is a huge increase in those as well. And so in 2023, there was 684 lenders that would lend you with a 10% deposit. Now, it's gone up, not as much, because there was already quite a lot, but it's 845 different lenders that will do this. Now, why is this happening? Well, the Labour Party and the Financial Conduct Authority have gone to lenders and said, you need to relax your lending criteria and let people borrow more money. We need to get the money markets moving again, which is an odd thing to happen. I mentioned in a recent video, that's what happened in the pandemic. If you are a business owner or you've ever had a business and you've tried to borrow money, it's very hard to borrow money. Way harder than getting money in your personal name. Because the business goes bust, the bank doesn't get the money back. And so what happened in the pandemic was the government backed these bounce back loans and anyone could get money. 50 grand on a bounce back loan was very easy. In fact, I know tons of people that took a 50 grand bounce back loan and their business wasn't even doing 50 grand in a year. They just logged on, registered for the money, and the next day it was in their account. Now that was crazy easy. They're not trying to do that this time. But what the Financial Conduct Authority is looking at saying is, look, after 2008, we over-regulated what you needed to do. We made it so it was very strict, and that is why we haven't had a property crash. Because when you apply for a mortgage now, you're vetted, really detailed vetted. They check everything, your bank statements, your credit rating, all of this stuff going back for years. And they'll check your affordability. They'll check where you got the deposit from. Now, that stuff didn't happen prior to 2008. And so there was a lot of reckless lending there. Like I said, you could just tell the bank how much money you had. You could tell the bank how much money you owed or earned even. And that was the problem, because people just made up that they were on 100 grand a year when maybe they were on 20, and they over leveraged themselves. Now, this isn't what's happening here. You still have to go through affordability checks. But what they are saying is, let's just make them a little bit more relaxed and give people an opportunity. Now, one of the reasons they're looking at this is because of stamp duty. So stamp duty went up this month in April, and it was a big jump, especially for first-time buyers. It was a massive increase. It went from 425,000 to 300,000, the threshold. And so that could be an extra £6,000 that you would need to have in order to buy a property. But now, maybe you can afford a property and you can get approved for a property on the 5% deal, then that makes up that difference. Then you don't have to find so much upfront cash in order to buy your property. And that's what they're looking to do here, to keep the market moving. Because the first quarter of 2025, we had 500,000 transactions complete, 500,000 deals done. But the next 9 months, the expectations, the forecasts, are they're only going to have the same. That's a big slowdown. And so government, lenders, everyone else is looking at what can they do. And so reducing the criteria, making it easier to get the affordability, that's going to mean that more people can go on a lower deposit deal. Now, this could backfire. It could mean that you get a lot of people and then the house prices drop, that they're in negative equity and they think, no, I'm not going to carry on with this. It's not worth it. And they hand the keys back like happened last time. But I think it's less likely to happen than it did in 2008, because we do go through more robust checks. So we're loosening it a bit, but it is still stricter considerably than 2008. What do you think? Do you think reducing the criteria, making it easier to get money, is going to cause the collapse of the prices, to cause a downfall like 2008? Let me know in the comments. And if you didn't do already, you haven't got long to get the fundamentals of property investing. Because we hit 40,000 subscribers in the last few days, we've reduced the price to just £20. That will help you find a property below market value. It will help you renovate the property. It will help you get a cash flowing strategy to make money with that property. Is that an HMO, serviced accommodation, or something similar to that? Do click the link in the description and grab the fundamentals of property investing for £20 while you still can. Do comment on the video. Let me know your thoughts on this relaxation, and do check out all the other content as well on the channel, including this video right here.